This ETF is really interesting. First off, read this disclaimer carefully. We are going to look at the communications sector, specifically next-gen connectivity, 48% from the 52-week lows and extremely close to a 52-week high, which means that it is quite significantly outperforming the S&P 500. It's called Defiance Next Gen Connectivity ETF. FIVG is the ticker. Okay. Let's first look a bit at the seasonality. We do not have a lot of data, just a little bit over 1 year, but you can see that June and July have historically been strong months. Here is some quick information about the ETF. Why invest in 5G? 5G describes the technological innovation and infrastructure that will likely support the next era of connective technology. This is a huge trend. Its adoption should provide faster speeds, more functionality, and lower latency, therefore transforming work practices and daily life. Widespread 5G connectivity has the potential to make information universally accessible, foster a digitalized sharing economy, transform diverse industries, and enhance people's quality of life. From smart cars to VR, augmented reality functions, from manufacturing to the automotive industry to medicine and healthcare, the impact of 5G could be felt across many spheres, including enhanced mobile broadband, Internet of Things, and mission-critical services. Yeah. So basically, it's going to have a huge effect, and I very much agree. The expense ratio is pretty decent, 0.30%, 75 number of holdings. Here you can see some other data. Here are some stocks. You get Nokia, Qualcomm, Ericsson, NXP Semiconductors, Marvell Technology, Exalinks, Skyworks Solutions. Yeah, very interesting. Here is some other data, some performance. The dividend is almost 1%, so you do actually get some dividend. Because when you hear about the ETF, you do not immediately think dividend, but there is actually some. Okay, so let's look at the charts. Weekly data points, and we go all the way back here to March 2019. You can see that it did pull back along with the market, but it has broken out to a fresh all-time high. So this is a very strong chart. You could argue that the RSI should be higher. There is a bearish divergence between price action and RSI. However, we have seen the accumulation distribution line increase. So that one has broken out above this level here, and that is good. Hence, you have to weigh the two. Bulls are obviously very much so in control. You could, of course, make the case that in the same way that this pullback was excessive, this rally has also become a bit excessive. You can see that historically it moves in these very clear cycles, very rational behavior. Here we are into crazy territory. Hence, be careful. Looking at the daily data points, we also get some correlations. There's 93% positive correlation with the S&P 500. That is pretty darn strong, so they do move together. If we load the moving averages, we are above all the moving averages. We are testing the 5-day moving average today, due to a little bit of a pullback. Given that this has been like a hockey stick and we have been overbought, I would not be shocked to see a pullback. I think that a pullback would be healthy. Maybe even the pullback to like the 20-day moving average. But so far, we have only surgically tested here the 5-day moving average. Hence the bulls, they still are in control. but we are certainly due a pullback if you think about the historical behavior here of this ETF. This is an anomaly. Okay, but to be perfectly clear, long term I am very much bullish on next gen connectivity. It is certainly the future. Let's have a quick segment about communication services, the sector. This is considered a sensitive sector, and there are a couple of other sectors in this space. You have energy, industrials, and technology. They are also considered to be sensitive. The other major sectors group is that you have defensive stocks, and you do of course have the cyclicals. Okay, let's continue here. This sector is undergoing massive changes, and it is actually becoming difficult to define communication service, because you do of course have the classic case of communication services, and that is telecommunications. But if you think about how you actually communicate nowadays, it probably is not that much via SMS and phone. It is usually internet-based. So ask yourself the question, is Facebook a technology company, or is it a communication services stock? I would actually argue that Facebook should be considered communication services. The same thing with many other social media companies. To problematize the issue further, should internet hardware and service providers be considered communication services? You could certainly ask that question, and it makes a lot of sense. You can see here under the communication services category, there are a few other interesting ETFs. You can see that the social media and the media ETF has rallied most of the lows, though the next gen connectivity ETF is closest to the 52-week highs. If you look a bit here at the Zeitgeists, you can see that they are very massively outperforming the S&P 500. One of the disturbing phenomena that has happened in relation to the riots, that is the big moves we have seen in the mass surveillance theme. Okay, these are mass surveillance stocks, and they are surging. They are rallying very big time. That's a hint. The big money knows something about this. Okay. Yes. Let's quickly. So why it defines 5G ETF? So it offers a liquid, transparent, low cost. Certainly, I very much agree with the low cost. Access to companies engaged in the research and development of or commercialization of systems and materials used in 5G communications. So to sum up, this is a very interesting ETF. To look a bit here, you can see some. Let's actually go to ETF.com because they do have some data here. The reason I didn't use ETF.com is because I'm not sure, but they have removed, because back in the day you could see the stocks and some breakdown, but that has just disappeared. Yeah. But we can see here the price earnings 92, that is definitively on the higher end of the spectrum. Price book around 3. Yeah. Now, value investors prefer price book to be below 1, but it is difficult to find, fantastic, price book in these kinds of sectors. And this is basically also a subsector. Yeah. Okay. Long term, I'm bullish, but I would not be surprised to see a pullback. Okay, let's now look at the S&P 500. Looking at the futures, you can see here that the price action for the S&P ETF for the S&P futures look extremely similar to what we saw with the FIVG ETF, except that the 5G has broken out to a new all-time high, meaning it is outperforming. We are seeing some pullback on the S&P today. We are overbought, very much due a pullback, but nothing dramatic so far. Let's look at the SPY to get some of the accumulation distribution. The buyers are stepping in, so there are buyers. This rally has, however, been critiqued by many people. There are a lot of claims that it is largely fueled, at least the latest push, by retail euphoria, retail investors, and it is compared to the dot-com bubble, where you also saw a bunch of influx of less seasoned investors. But yeah, it is an amazing move, amazing crash, amazing rally, but we are very much due a mean reversion. And given the strong correlation between the SPY and the 5G ETF, if we do see further pullback on the S&P, we would expect it to trickle down to 5G. Okay, that's going to be it. Crazy market, of course. Let the trend be your friend. Be very diversified, and we are talking about true diversification. You want a mixture of bullish and bearish positions, maybe even some that are market neutral. Have some stocks, some bonds, some commodities, some forex, some cryptos, and also some positions to benefit or at least trade volatility.